students, welcome to the lecture series on financial management. Today in this lecture, we shall cover the topic working capital management. Under working capital management, we shall learn the introductory part, that is meaning of working capital, purpose of working capital, what are the various types of working capital and the operating cycle in a working capital management. The objective of this lecture is to understand the conceptual framework of working capital management, the meaning of working capital based on the concept, that is balance sheet concept, which is known as gross working capital concept and net working capital concept. We shall also learn meaning of working capital based on time, that is permanent working capital and temporary working capital, and how the working capital is used in a stable firm and a growing firm. We shall also learn the purpose for which working capital is being used, and finally we shall learn the meaning of operating cycle, the length of operating cycle, the manner of computation of operating cycle, and the example to illustrate the operating cycle mechanism. Now students, first of all we will learn the meaning of working capital. Working capital refers to the fund which needs to be invested in the short term assets or current assets, meaning thereby those assets which are required in running day-to-day business, such as cash, marketable securities, receivables and inventories. So, it is a form of short term loan which we require for acquiring the short term assets. Elaborating it, we can say that any balance sheet item that represents the current liquidity position of the firm are being financed by a fund called working capital. That is, it is a dedicated fund which we are required to use in our business. Let us see the definition of working capital on the screen. Working capital refers to that part of the firm's capital which is required for financing short term or current assets such as cash, marketable securities, receivables and inventories. Thus, funds invested in current assets keep revolving fast and are constantly converted into cash, and this cash flow out again in exchange of other current assets. Working capital is also known as revolving or circulating capital. Now students, let's analyze this definition. This definition holds two parts. One is saying that it's a dedicated fund which we are using for acquiring the current assets. Now what's current assets? Current assets are those balance sheet items which are represented on the asset side of the balance sheet. They are such assets which are being used for less than 1 year and they can be converted easily into money. These are also called earning assets because our day-to-day business activities are running on the basis of these assets. They are different from fixed assets because fixed assets are used for a longer period. For example, fixed assets are plant and machinery which can be acquired once and can be used for a longer period for around 5 to 10 years, while stock is a current asset because it is coming to an end as and when a production cycle is ending. So, this is the basic difference between current asset and fixed asset. So, under working capital, we are focusing our attention towards these assets which are easily converted into money. Now, students, let's see what the second part of this definition is saying. It put its emphasis on the revolving capital, meaning thereby that the cash is being used for acquiring the current asset, that is stock. Again, when this stock is being sold on credit and the receivables are generated, the time receivables are converted into cash, again we are getting a cash inflow. This cash inflow will again be used for purchasing the inventories. So whatever we are generating in the current assets, we are putting it back in the other form of current asset. This is called the revolving working capital or the revolving or circulating capital. With this we have learned the meaning of working capital. Now students, let us understand what's the purpose behind using working capital. We know that working capital is being used for financing the short term assets. Now very specifically, the working capital is required to hold cash for acquiring the raw material. Then we need working capital to hold work in progress for the production process, meaning thereby the period required for transforming work in progress into the finished product. For that particular period, we are in need of the fund which is being generated by working capital or which is being financed by working capital. Thirdly, to hold the finished goods up till it is reaching the final consumer for their continuous demand or to meet a sudden demand or a seasonal demand, we are requiring the short term working capital fund. Finally, we require working capital for the period the receivables are being converted into cash. Primarily, they are being used in the following hierarchies: cash, raw material, work in progress, finished goods, receivable. Again, receivables are being converted into cash. So, this is a cycle moving on in a working capital. We know that stock has three elements: raw material, work in progress and finished goods. So, under working capital, we are putting our emphasis on the management of receivables, management of cash and management of inventories. Under management of inventories, we need to look at the aspect of raw materials, work in progress and finished goods. We can use different techniques like economic order quantity and other models by which ordering cost, carrying cost can be minimized and being controlled. The procurement can be controlled. We need to do this exercise so that an uninterrupted flow of inventory can be there in the production process. So, working capital is required to ascertain the need of fund for our production process so that the production may not get hampered because of lack of fund. Secondly, we need the working capital in a sufficient quantity. If we block the working capital in all the short term assets, even then it is harmful to the business as we are not using or circulating cash as is being required. So, this is the purpose for which working capital is needed in a business organization. How efficiently we can use this working capital is called the management of working capital. Now students, let us understand the types of working capital. There are broad two categories under which we will learn the concept of working capital. First is balance sheet concept, another is operating cycle concept. Balance sheet concept has recognized working capital as gross working capital and net working capital. Gross working capital means the total of all current assets or all short term assets. Current assets here mean cash, marketable securities, inventories and receivables. They are meant for a lesser period and they are liquid assets. Gross working capital represents the liquid position of the organization, that this much of the assets it is being holding for getting readily available as a cash in the business. They are the cash equivalents. Now, net working capital is a broader concept and it works on the principle of solvency. It is more appropriate concept while analyzing the financial position of an organization. The corporate experts are using net working capital as a medium to evaluate the short-term position of an organization. So, what is this net working capital? Net working capital means excess of current assets over current liabilities. Now, how do we analyze it? Current assets, we all know that they are cash, marketable securities, receivables and stock. So, assuming them to be 100, and our current liabilities, that means trade creditors, outstanding expenses, these all shall form the part of current liabilities, assuming them to be 70. So, the working capital will come out to be current asset minus current liabilities. So, 100 minus 70, so the working capital will work out to be 30. So, this is a formula by which we can assess the net working capital of a organization. Going ahead, it can be represented in a formula which is used for analyzing the ratios. Its formula is current assets upon current liabilities. It's called current ratio, and ideally it should be 2:1. That means current assets should be double the current liabilities. An organization should have at least double the amount of readily convertible assets so that they can pay off the liabilities in a much better manner. Now, second one is operating cycle concept. Operating cycle means the time period between procurement of supplies and collection of cash from receivables and inventories. We will learn the concept of operating cycle in detail later on. Now, let's see this presentation of working capital on the screen. We have classified working capital broadly in two concepts. Based on the concept, that is balance sheet concept, it's called gross working capital and net working capital, and another is based on time. Now, let's learn what are the working capitals which are based on time. It can be permanent working capital, or it is also known as fixed working capital. Another is temporary working capital, and it is also known as variable working capital. Now, permanent working capital has again two subcategories. First one is a regular working capital and another one is reserved working capital. Similarly, temporary or variable working capital also has two parts. First is seasonal working capital and another is special working capital. So, let's learn these concepts one by one. So, now we are learning working capital based on time. So, first one we are elaborating is permanent working capital. Permanent working capital means that a certain minimum level of current asset which is essential for the firm to carry on its business irrespective of level of operation. For example, there is a bakery. So, the bakery requires minimum of 2 bags of flour every time in the stores. So, for this they are needing a permanent stock and they will dedicate a source of fund for acquiring this fixed level of inventory. It is suggested that this inventory can be purchased, or we should say that it should be purchased from a long term fund because it is a permanent requirement. So, now we can say that permanent working capital is that source of fund which is invested in acquiring a minimum fixed level of inventory irrespective of level of operation. Irrespective of level of operation means whether 100 units are being produced or 200 units are being produced or nil unit is being produced, this much amount of the stock should be maintained by the management in the organization. Now, second is called variable working capital. Variable working capital is that requirement of fund which is over and above the fixed working capital. It is not that dedicated fund as that of permanent working capital. Now students, let's learn one very important concept, that is the use of working capital in a stable firm and use of working capital in a growing firm. Stable firm means those firms which are generating much profits and are stable in terms of their operations, their management and their way of working. So, let us see how working capital is being used in a stable firm. You can see the management of working capital in a stable firm with the help of this diagram. In case of stable firm, the permanent working capital is stable over time and takes the shape of horizontal line, while temporary working capital is fluctuating, sometimes increasing and sometimes decreasing. Both these kind of working capitals are shown on this graph. Let's see these colored lines. This blue line is presenting the permanent working capital level which is parallel to the x-axis, and this fluctuating line is showing the temporary working capital. The arrows are showing how the difference in both the type of working capital is there. So, let's see how the mechanism of permanent working capital and temporary working capital is being managed in a growing firm with the help of this graph. The permanent working capital may also keep on increasing over time to support a rise in level of activity. Hence, permanent working capital line may not always be horizontal. Both these kind of working capitals are shown on your graph. See, as level of activity is increasing, that means earlier we were producing 100 units. Now 200 units are being produced, afterwards 500 units are produced. Since this is a growing firm, so a fixed amount of working capital is blocked for the irreversible or irreducible inventory with the passage of time, while the temporary working capital has a fluctuating line showing as in the graph. Now students, we are learning a very broad concept in the working capital management, and this is known as operating cycle. We have already discussed that operating cycle is the time lag between the procurement of supplies and collection of cash from receivables. Now, how this operating cycle is being managed? So, there are certain phases in which operating cycle works. In the case of a trading concern, the length of operating cycle will be using of cash for procurement of trading goods, then selling them on credit. So, receivables will be generated, and when these receivables will be converted into cash, again we are getting the liquidity in our hands. This cash will be again used in the purchase of trading goods. So, it is a very simple cycle in the case of a trading concern. When the concern is manufacturing unit, the phases will be increased. Now, the inventory will hold three parts: raw material, work in progress and finished goods. So, in that case, the cash will be used first to procure raw material, then we will be needing cash for procuring work in progress, and then this work in progress is transformed into finished goods. Then it is being sold on credit. So, receivables will be there, and finally, we will get back the cash. So, this time lag between conversion of finished goods and work in progress and holding of raw material, during this period whatever fund we are requiring is called working capital used in a operating cycle. So, this operating cycle shall be computed in the number of days. So, there is a specific formulas required for computing the days in a operating cycle. Now, let us learn what are the components of operating cycle. The components of operating cycle are represented in a symbolic manner. They are called R, W, F, D and C. Now, let us learn what are these R, W, F, D and C. R here represents raw material storage period, W represents work in progress holding period, F represents finished goods storage period and D represents debtors collection period. So, adding R, W, F and D, we are getting gross operating cycle. When we subtract C from it, we will get net operating cycle. C will represent the credit period allowed by suppliers and it shall also include the time lag for the expenses, that is outstanding expenses and salary outstanding. These expenses period shall also be considered in the C. So, with this we have learned how the computation of operating cycle will be done. Now, there are certain formulas by which the R, W, F, D and C are computed. Let's see them on screen. Formula for average raw material storage period is average stock of raw material divided by average cost of raw material consumption per day. Second formula is average work in progress. It shall also be computed in days. So, average stock of WIP, that is work in progress, divided by average cost of work in progress per day. Third formula will be average finished goods, that will be average stock of finished goods divided by cost of goods produced per day. With this, the three level of inventories will be computed. And third formula will be average debtors collection period. Its formula will be accounts receivable, or we can say average trade debtors divided by average credit sales per day. So, we have computed R, W, F and D. Now, the last formula is for C, that is collection period. So, average payable will be divided by average purchases. These purchases will be credit purchases per day, and last will be the time lag, which we will compute using the formula. Now, this formula will be average creditors upon the average expenses per day. Now, we have to compute the number of cycles, that is how many times this operating cycle has to be run. So, its formula is number of days in a year divided by net operating cycle, as have been computed using this equation of R, W, F, D minus C. Let us summarize what we have learned in today's lecture. We have learned the meaning of working capital, what is gross working capital, how the net working capital is being computed, what are the purpose for which the working capital is required, and the types of working capital based on time, that is permanent working capital and temporary working capital. We have also learned the mechanism of computing operating cycle. Thank you.